Are silver and gold still solid investments? For some years now, gold and other precious metals have lost their prestige as investable commodities and have been relegated to the background as investors seem not to prioritize them as investment hedge anymore. Because of the ongoing tug-of-war between investor sentiment and precious metal prices, you need to get your facts straight before investing any money in precious metals. In the event of a future market or economic slump, as well as during extended periods of rising inflation, both gold and silver may very well supply a hedge. Well, that is how it is supposed to work. Unfortunately, it has not been this way recently. Which metal might be better for your portfolio depends on how the two metals are used, their economical sensitivity, and their operational qualities. In this video, we would explain everything in a way you would understand and be able to make your own decision, so stay tuned. It would make sense to evaluate silver and gold as investments, as their strengths as tangible assets are similar. They act as restraints on stocks and stock markets, havens from socio-political shocks, and inflation hedges. The two precious metals do differ significantly in several ways, though. But is it wise to invest in precious metals, especially now? The obvious fact to understand here is that their value would constitute a store of value that protects investors from rising inflation. Well before the ancient Egyptians began creating jewelry and religious objects, gold had a long history in civilization. But it didn't happen until about 560 BC that gold began to function as money. The goal of merchants at the time was to streamline commerce by developing a uniform, easily transferable form of money. The development of a gold coin bearing a seal looked to be the solution because gold jewelry was already widely used and recognized around the world. Even if the US dollar, or other major foreign currencies for that matter, is no longer backed by gold, it still has value in today's climate. It remains crucial to the world economy. Gold, silver, and other precious metals can keep their worth over a long time when used as a store of value in the same way as money or other forms of commodities. Precious metals have historically been used as a hedge against inflation, especially gold. These metals might be an excellent asset to consider for your investment portfolio during periods of economic unpredictability. Additionally, compared to more conventional stocks and bonds, alternative assets like real estate and precious metals offer a certain level of diversity. The United States was a gold standard nation up until 1993, which meant that gold was used to back its reserves. Dollars from investors could be exchanged for a certain amount of gold, yet gold and silver haven't always done as well throughout time, despite their reputations. Both are well known and have a lengthy history, but they provide additional value, benefits, and a level of safety, so you should consider how they will do in various economic environments before investing in either. Investors have a wide range of alternatives when it comes to how they might invest in gold or silver. Here are some crucial points to consider when contrasting the performances of silver and gold. There's a reason why gold is known as a safe haven asset. Gold is frequently promoted as an inflation hedge, protecting investors from escalating inflation. Therefore, many investors turn to gold when they need to weather the storm during volatile market runs. Since gold is primarily utilized as a store of value, there aren't many industrial uses for it. The price of gold fluctuates as investors assess their own financial needs, their level of desire for safety, and the expected returns from other asset classes like equities and bonds. Silver and inflation have a strong link. Yet its natural characteristics help to maintain its value in the face of inflationary uncertainty. Industrial demand for silver declines during periods of high inflation, although this is generally countered by strong demand from the investment sector. The scenario is reversed when inflation decreases. Different markets drive the demand for gold and silver, with gold being largely an investment asset and silver being primarily an industrial one. Compared to silver, gold is easier for investors to store assets due to its comparatively higher price per ounce. Gold is typically regarded as a diversified investment. Irrespective of whether you are concerned about inflation or not, a weakening currency exchange rate, or even protecting your money, it is obvious that gold has historically acted as an investment that may provide a diversified component to your portfolio. Gold and stocks, bonds, and real estate do not correlate if diversity is your only goal. Although both silver and gold have the potential to serve as a safe haven investment, gold tends to perform better over the long term. Nevertheless, over shorter periods of time, the unique dynamics of each market ends up playing a bigger role in the profits of each investment. Numerous products, including dazzling jewelry, basic batteries, medical equipment, and microcircuits are made from silver. It also leads the way in cutting-edge industries. According to the World Silver Survey, the majority of silver is utilized in heavy technology and consumer technology, including solar panel cells, cell phones, tablets, and many other goods and applications. Due to its limited usage outside of jewelry and investment, silver is more susceptible to economic fluctuations than gold. Silver is typically higher in demand when economies are doing well. Finding a buyer will probably be harder for silver sellers than it will be for gold sellers. Simply put, more people are aware of and understand the gold market. It provides a greater selection of reliable, safe places to invest. Some contend that silver is a primitive artifact that no longer possesses the monetary capabilities of earlier times. Paper money is the preferred form of payment in the modern economy, yet it has long been popular to invest in precious metals. Despite not being as popular as gold, silver has recently become popular among investors. Its limited supply and tremendous demand from sectors around the world are to blame for this. Given the price increase, investing in silver may be a wise choice for long-term savers, and as a result, many individuals have begun to embrace the notion of a future with silver linings. Because silver has a relatively limited level of liquidity, its price can move significantly over shorter time frames. Silver often costs less per ounce than gold, which makes it more affordable for small retail investors who want to possess precious metals as tangible assets. But on any given day, the volatility of silver prices might be 2 to 3 times higher than that of gold. Although traders may profit, controlling portfolio risk can be difficult with the present volatility. Given the distinctive qualities of each and the current state of the economy, you may choose silver or gold, depending on your particular position. However, be warned that buying and holding either will not produce very high after-inflation returns. You may feel as though you've hit the jackpot when you purchase the precious metal outright, and while you have the security of being able to hold your investment in the shape of gold bars or silver coins in your hand, just like when you hold a dollar note. However, you should take a close look at what it has accomplished in the past over a significant amount of time. This way you can see what it will do in the future from then. Additionally, gold values are entirely based on human emotion. People rush to buy gold when they think the economy may implode. The utility is the main factor that sets investing in precious metals apart from other commodity investing. Investors determine the value of the majority of other commodities based on consumer demand and supply. For instance, if you want to invest in the cocoa bean, you can determine cost by looking at how much cocoa consumers are currently consuming, how their tastes are evolving, etc. In contrast to other materials, precious metals have limited commercial utility. Assets like gold and silver have comparatively few consumers or industrial uses as compared to other metals. Nearly half of all silver purchased and sold on the market is utilized for commercial purposes, with uses ranging from electronics to dentistry. The most crucial thing to avoid investing in is something you don't fully comprehend. We believe you learned a lot from this video, so smash that like button and don't forget to subscribe to the channel.